back to the D4U USA channel. If this is your first time joining us, welcome. We help entrepreneurs and professionals live their American dream through their business, their investment, and their profession. I am attorney Mari Ribeiro, a lawyer licensed in Florida, and today we're going to be talking about what you need to know about credit score in the United States. Now, as always, before we get started, while yes, I am an attorney, it's important that you understand that I am not your attorney unless we have a written agreement that says otherwise. So everything we talk about is going to be strictly for educational purposes only and should not be considered as legal advice. This is because every one of you and your situation is unique, and that's why I invite you to reach out to us so that we can give you personalized attention and guidance on how you can live your green card life. Now, let's jump right into today's topic of U.S. credit scores. Firstly, what is a credit score exactly? It's important to know that the United States works, lives, runs, depends on credit. That's right, lending money to people through credit cards, mortgages, business loans, car loans, and personal loans. Your credit score is what determines how good of a borrower you are based on how you pay back your loans and your credit cards. Now, there is a system of measurement. So there are 3 different bureaus that rate you as a borrower. There is Equifax, there is Experian, and then there is TransUnion. Now, these are the 3 bureaus that keep record of the history of you borrowing money and paying it back on time. And it assigns a score based on how prompt you are with paying back money that you've borrowed. This score is linked to your Social Security number, so it will always be assigned to you and it will always follow you around whether you take out loans or not. So how important is your credit score, especially for foreign nationals who are immigrating to the United States? A credit score is very, very important to all people in the United States because, again, the United States runs on credit. So when you go to apply for a credit card, or for example, you're going to go buy a car and you need an auto loan, or if you decide to buy a home, you might need a mortgage. The lender will look at your credit score to determine 1, whether they are going to actually let you borrow the money, and 2, if they do decide to approve your loan application and let you borrow money, your credit score will determine the interest rate that you will be paying on the loan. So if you're continuously late with making payments on loans, or if you stop paying altogether and you default on a loan, you will have a lower credit score, and the lender will see lower credit scores as a risk in letting you borrow money. So what about if you are coming to the United States and then you're being offered credit cards left, right, and center? So what happens is a lot of foreign nationals get their Social Security number and then immediately go and apply for credit cards, especially from retail stores. This is where you're usually going to be offered store credit. So for example, if you go to a store like Apple and you're going to go buy the new iPhone, they offer you Apple credit when you're at the register and ready to pay with your new Apple credit card. So when Apple offers this to you, they're going to pull your credit score from one of these 3 or maybe even all 3 of the credit bureaus and see whether or not they're going to let you borrow money. So if you are brand new into the United States, you don't have a history, and so you're probably going to get denied. So you leave the Apple store and then you go to Target. Target also offers you a credit card, and then when they pull your credit, you're again going to be denied. So now you hear from a friend that you can totally get approved if you go to a specific bank and you can apply for a credit card through the bank. So now you go to this bank and you apply for this credit card, and of course they run your credit score, and now you're denied a 3rd time. So now your credit history shows that 3 lenders, Apple, Target, and this bank, have denied to lend you money through a credit card. This is usually going to be because when you went to apply for your first card, you had no credit history, which makes you look like a risk. No one knows how timely you're going to be paying off your loans or even if you're a good borrower. So of course you're going to be denied all 3 times. This is why it's really important that you as a foreign national who has just been given a social security number start to build good credit. But how exactly do you build good credit as a person who just got their social security number? There is a credit card known as a secure card where you apply for it and you are generally going to be approved as soon as you deposit money into this secured card. So you're essentially going to be borrowing your own money and paying it back to build credit history of paying off your loans every month. The purpose of a secure card is not to gain rewards, it's not to get cash back, and it's not to earn mileage, but it's mainly to build your credit history. So you'll be paying your card on time for at least 6 months to a year so that when you are ready for a bank loan or a mortgage or a credit card, you look like an attractive borrower and you're more likely to be approved. I hope you found this video helpful, and of course if you need personalized help, don't forget we are just an email away, and I look forward to seeing you on the next video.